let me change this around a little bit because normally I do the introductions and so on. I know both of you, but could I ask you just to take a minute and tell the world a little bit about who you are, and then we can get into the conversation.
So my name is Som Seif. I am the founder and CEO of a company called Purpose Investments. I am, I guess you'd call a bit of an entrepreneur, but I don't think of myself that way. I just think of myself as someone who probably couldn't get employed by a large company anymore. So, I've done a few things in my career. I started a company about 12 years ago in the investment space called Claymore, an ETF company, quite disruptive at the time. Built that up quite aggressively in the Canadian marketplace, and the fastest growing company in Canadian history organically. Sold it to BlackRock in 2012, and then subsequently started a company called Purpose, which I now am building in the financial services space again, broadening beyond just investments, but also into credit, lending, small, medium business enterprise, and consumer, as well as digital banking. And then beyond that, also founded a firm called Wealthsimple, which is in the investment space, robo space as well. So very much engaged in helping disrupt the financial services space as much as possible.
And Wealthsimple is sort of riding or created its own wave, or is riding an existing wave. I don't know which one it is, but terrifically successful.
It is.
And yeah, congratulations.
Done a wonderful job on the brand.
So I'm Ben Narasin. I'm a general partner at Canvas Ventures. I was an entrepreneur for 25 years. Started a business when I was 12 and ran businesses all through high school and college, and then started one of the first e-commerce companies in the world in 1993 called fashionable.com. I've been told, invented, whatever that's worth, cost per click in sort of 94, 95. Didn't know about this thing that Jeff Bezos knew about called the business process patent, or I would still be sitting here talking about my experiences, except every day Google would send me just massive amounts of money. So bummed about that. But took the company public in 99. World blew up in what was called, the bursting of the bubble, and then took it private, which was a great outcome for everybody involved. All that was on the East Coast of the United States in New York City. Moved west, got to California around 2003, and noticed there was a big gap between angel and venture, which today is known as seed investing, but back then didn't have a name. None of the seed funds had started yet. So I started an institutional seed practice for a large venture debt company and funded about 80 companies, from the fintech being a category I love. My second investment ever was a company called Lending Club, which went public a few years ago. Cabbage, Realty Mogul, Circle Up, Earnest, all these companies are trying to change the way finance is done with consumers online, and in some cases with businesses. So after about 8 years and 80 investments, had a few $1 billion worth of public and a few $1 billion worth of private exits, not to me, but in terms of the value of the companies that were created, and started talking to different venture firms and ended up becoming a general partner of Canvas. And the 15 seconds on that is Canvas is a classic boutique Silicon Valley venture firm. 4 GPs focused on finding the next big thing, Series A and B investors, and passionate and engaged, and a lot of fun to be involved with.
I can't help but think that of all the successes that you've had, the thing that stands out to me anyway is you got into e-commerce in 1993. I mean, you were like the only guy in the world doing it in 1993. That's pretty good.
I remember it quite clearly. I had always been an entrepreneur, so immediately before that I had an apparel business, a menswear company that had done quite well. It was a lifestyle business. And I was talking to some friends in New York, and they're like, oh, what are you doing now? You're an entrepreneur, you do new things. And I'm like, yeah, I'm doing this internet business. And the guy looked at me and he said, inner what? I was like, oh, guess I'm a little early. But, it's the nature of life. If you're not early, you're probably too late. The trick is to be early by the right amount. Because there's a great saying, being too early is the same as being wrong. You just got to time it. You've got to be able, we sucked it up for 6 years, didn't raise any capital, so it wasn't easy timing, but.
Well, that leads me into the first question. I want to put it to all three of you. And we talked about it a little bit in the last couple of minutes, but when you get going on something on any venture, on any startup that you're doing that has promise and looks as if it's going to go, what do you have to get right, and more importantly, what do you have to avoid getting wrong? What are sort of the two standouts on either side of that equation that you've got to really recognize? Som, do you want to start?
Sure. There's a lot of depth to the question. Look, here's what I'd say. I think the number one thing, and it's not a cliche, but it's true, is if you're going to be an entrepreneur, you need to have an awesome group of people around you that drive you. And so if you don't get your people right, if you don't get your team right, I've seen really great business ideas and business plans fail because they have the wrong execution team around them. And as an entrepreneur, I'll tell you, it is the biggest and most stressful part of building a business, is making sure that you have the right people to help you drive the business and the ideas that you want to be able to go forward with. If you don't get that right, you're ultimately going to fail, you're going to be a lot of headwinds to failure. I think that's a critical thing, and there's a lot of depth to how to do that as an individual and as a team, in terms of it's not just your founding partners or your early partners, but it continues through the life cycle of the entire business. And it ultimately goes up to incumbent businesses that are out there today. I mean, the struggle that most players today face is, you might be big, but if you don't have the right team to lead that business to the next level, that's when disruption and change can really hurt you.
Do you want to jump in?
Yeah, that's actually almost exactly what I was going to say, is if you get your team wrong, it's going to be a problem. But you will get parts of your team wrong. That's going to happen. So I would say the other thing that you can't do is delay a decision, like removing a toxic team member, or thinking you just have to move very quickly when you see a problem. So speed of decision making is, I think, important. I see a lot of people that wait too long. They're waiting for perfection or in their product, or they're waiting thinking maybe this person can change their behavior. You have to move fast.
Yeah, I mean, I agree with everything that was said. There's all these little pithy sayings in Silicon Valley, which I've sort of added to my lexicon. A's hire A's, B's hire C's. You just can't compromise on quality. One of my partners just took a company public called MuleSoft about 3 weeks ago, and we were spending some time with the CEO, Greg. He interviewed everybody they hired until they had 500 people. Now, he didn't go through the whole process, but he did meet everybody. And when he talked about why, he said he just didn't want anybody to drift, because he'd interview somebody and he'd go back to the person that brought him in and he'd say, well, why are you, I don't know about this person. They said, hey, he can get the job done. It's like, I don't want people that can get the job done. I want people that can inspire and lead and do great things. Good enough isn't good enough. And when you start compromising on that creates all kinds of trauma. Ideas are worthless. Execution is incredibly valuable. It was interesting, yesterday my panel followed a lawyer talking about patents and all this, and I was like, okay, I mean, all that's great, it's useful, it's important to understand if you have a true invention, but in the evolution of the web, anybody with an idea and a free account at the library can launch a business. I took my public company private. We used to pay $250,000 a rack for a server, and we would pay $5,000 a month for bandwidth. The minute I took that company private, I moved on to a $99 a month colo. This is in 2001. Nothing changed, right? Public company running on a $100 a month system. And that was 10 years ago. I mean, you just need so little to get started. So getting started is easy. Surviving and prospering is hard, and that comes down to execution. As things scale, you talked about that point, the difference between a one-person company, there's these huge breakpoints. 1 to 2 is different. 2 to 12 is different. 12 to 50 is different. 50 to 500 is different. Things break at each time. So thinking ahead to the fact that you're going to have a lot of learnings. I mean, there's just so many pieces. But execution, quality of talent, tenacity is the only secret to success in entrepreneurship. You're not going to get funded unless you're smart with a great idea. So you got to be able to survive.
And I would just say everything in terms of, like, a lot of people think they have got a great idea. I mean, entrepreneurship isn't having a great idea. Entrepreneurship is solving problems and having an issue that you're going to solve and with great ideas around it. But ultimately, great ideas don't lead to success. It's all this execution that goes along. Every great individual or company that we sort of look back now and say, wow, look at how successful they've been. They've gone through many different of these, call it growing pains, and they've been able to overcome them. The things that would kill an organization, they've been able to figure out how to get to that next level successfully, and that's what has made them hugely successful. Not the fact that they had a great idea 10 years ago or 3 years ago. It was that all through that process, everything that would have ultimately tried to make them fail or would have been a stumbling block, they overcame it successfully, and that's what you really want to sort of study about a great organization more than anything else.
Well, of course, we all know how startups work because we watch Silicon Valley on HBO, and we know that's a reality show, I think. But
by the way, it's realistic.
Actually realistic.
It's painfully true. But I think, and I wince every time I watch, and I've watched every episode, including last week's. But it's true, if you take the worst experience an entrepreneur has ever had across every company ever started over the last decade, and you squish it all into one, it is all the outlier experiences. I've seen everything that happened in there happen, but it doesn't happen that often. And it certainly doesn't all happen in one company. I mean, it's sort of like, oh, I was in California during the earthquake, standing under the building that was built poorly, and things fell on my head, and then the hospital was broken, and whatever. I mean, you just couldn't add up that many bad things in one set of realities.
But of course, it's a great show because I have a daughter who's in Silicon Valley, and of course, when I watch it with her, she says, "Oh, that's really Bill," or this character is actually this guy. So great guessing game down there. But it does bring up an interesting point that so many people who start are young, idealistic, enthusiastic, and you generally start with your friends. We talked about that. Your initial group around you are the people who believe in you. And at what point do you really have to sort of make that difference between personal life and business? And by that, I mean, at what point do you just get really, really tough, not only on yourself, but frankly, the people around you as well? You talked about getting the team right, and you're not always going to get them right. But that, to me, seems to be one of the important lessons, especially for the first-time startup people, trying to figure out that, am I a business guy or am I a friend of these guys?
Well, I mean, look, I think this is absolutely critical, and it is usually the case that you partner with friends or people or acquaintances early on, and I can tell you that that's actually one of the most difficult decisions that people will make over time is, being in business with a friend or someone that you have a different type of relationship with. It changes over time. I hired some friends early in my first business. I learned a lot between my first business and second business. I'll give you some anecdotes, but one thing, just as a side thing, I played sports competitively when I was young, and I remember this, when I used to sit there, and my coach would always say to me, I remember it, that as a coach, you have to make a decision. Are you their friend or are you their coach? Because the problem is if you are their coach, and you yell at them, and then they think you're your friend, they don't know how to differentiate. And it goes to the same thing in terms of work environments. You've got to be able to delineate between what is critical for the organization and what is critical for our friendship. And I think it's extremely difficult. It's a very fine line, and many people can't do it well. That's where some partnerships fail.
I've funded a lot of companies, and one of the things I learned that I started telling entrepreneurs all the time, the majority of my entrepreneurs are first-time entrepreneurs, usually young. And I'll say a couple of things. One is 3 founders almost never works. Triangle theory is very powerful. I've actually funded probably half a dozen sets of 3 people, and they've never survived as a set of 3 people. So I bring that up because I always say to them, I don't know which of you is going to die in this experience, but I think you should all make your wills now. You should sit together while you're friendly and decide how to treat each other if somebody disagrees later, because it's highly likely it will happen. Sometimes they listen, most of the time they don't, but they always split up. 2's easier, usually, but not always. Often I've got a set of 4 that's doing really, really well. Now, over time, they've shifted their roles. The challenge is, if everybody's truly committed to the business, it is so incredibly hard to find one world-class entrepreneur. What do you think the statistical chance is that one will luck into 3 more or 2 more or 1 more across their peer group of friends? I mean, it's almost impossible. The challenge is, so I think you pointed out, move faster. I've had these conversations many times. I'll just give you one. I was sitting with a guy. He's doing a tremendous business right now. It's heading for IPO, hopefully. And I remember sitting with him every quarter, and one quarter he said, I've got a big challenge. I said, what is it? He said, well, there's somebody in the organization that I think has to leave. And I'm like, please, please, please let it be your co-founder. And he said, it's my co-founder, and I've known him since high school, and we were really good friends. So I was like, okay, that's good. We've been together now, 3 years? That was obvious since day one. I've never wanted to say it to you because he's your friend. But if you know now, everybody in your company has already known for a long time. It's not going to be as painful as you think. It's going to be painful for the 2 of you. And in fact, when you did get there, there's a huge weight off his shoulders. Do move faster in those cases. If you even think, forget about whether it's your friend and co-founder or just a random person in the organization, if you think maybe this person's not a fit, they already absolutely positively are not. You're already months into being too late. You should take the action. And the rest of your team will generally be incredibly supportive after the fact, because as a last point here, if you're willing to suffer somebody of a lesser quality, what is that message to the rest of the people? Whether it's your best friend or not. Sometimes you got to cut off the arm so the body prospers. And it's a hard choice, but entrepreneurship at the end of the day is about constant, hard choices and hardship. There's no other way around it. Forget about what you read in TechCrunch or wherever else you look. It's just effing hard. So be prepared to make lots of hard choices, and the better you become at that, the better chance you have of surviving and prospering.
And I think all great advice, but when you're young and you're starting a company, as a good chance it's going to be your buddy from university or somebody else who's going to be doing that with you, because you just don't have the network. You don't know how to source these top quality people. And so I know certainly my first companies, I was either a solo founder or it was with a friend. And I have hired and fired a lot of my friends in my early businesses. And so now what's really interesting is now that my network is built up and I found companies, I do recycle founders and because many of them have become friends.
Friend
But we
cycling?
didn't come out of, but they're not people that I knew and grew up with and was in a swimming hole with when we were 12 or something like that. These are now people that they've become friends, but they became friends because we were in the foxhole together and we came through a battle together and we have bonded, but we bonded later. So I'd say that don't be afraid to do something with a friend, but be very ready to take action if you need to.
I want to give a story that. So I think the comment when you start your first company, you're kind of learning. I mean, it's all, you have no wisdom, and you need to have great counsel around you. So if you have great people around you that help you think through these problems, and it's really wonderful. But you learn a lot, over time, and wisdom is a really powerful thing. I'll tell you, one of the things after selling my first company and in the contemplation of my second company, one of the great things, I read this wonderful piece of research around the concept of team building, and it was looking at a study based in New York on Broadway, and they did a study called the Q score, and they measured the success, and they have apparently very rich data on this, of Broadway musicals going back to the late 1800s. And they looked at the success of the Broadway musical in terms of receipts and value and all the rest of it. But also, what they measured it based on was the team, the production, all the actors, and everybody involved in the production. And what they measured was the score of, how close was the group? Had they worked together in the past, or were they brand new and never worked together? And what they found with very strong evidence, very strong correlation, was that productions that had a very low Q score, meaning that they'd never worked together before, and a very high Q score were the most underperforming Broadway musicals. And the ones that actually were the best were those that had about half, a 50% type of Q score. And what this tells you is, and why this is so important, is that when you bring people together to form a team, creating an environment of creativity, innovation, and all the drive that you need to have people you trust. So people that you want to work with and you've worked with and you can rely on in tough times and through difficult things. But you also need to ensure that you have people around you that are totally brand new and push you and drive you and don't make you fall into the same habits or troubles that you may have had in the past. And so when I started my new company, I made a very strong discipline that for every hire I made from my old company, I had to make a hire from the non-ex-Claymore person. And you know what's happened over time is that has been an extremely powerful thing. The new people that I brought on were so critical, but the core that I had from a trust perspective was very important to help me as you formulate over time. So, it's a really important discipline that you learn over time that helps you kind of build a company and go to the next level.
Let's assume for a second that we've got the right team. We've fired a bunch of friends. We don't have to send them presents anymore. And now we're at the point where the money is coming in. Investor money in particular is coming in. This may be the first time that you've looked at a bank account and said, holy crap, there's like hundreds of thousands of dollars, if not millions of dollars in there. Talk to me about the importance of understanding how to handle investor money or that first flush of money that comes in, the importance of getting that part right, and how do you get it right?
I think it's very important before somebody writes you a large check, they're going to have asked you, what do you plan to do with this money? And now, no plan ever survives first contact with the enemy. So the uses will go maybe not exactly where you intended, but you always have to remember that that's somebody else's money. But at the same time, they're expecting you to deploy it to increase the value of the organization. And so you have to be follow your plans, be very transparent with your investors about what you're doing and why you're doing it. And but that money's there to be used. So it's not there just to sit around and collect dust. So you do need to use it to hire those key hires that you said you were going to hire. You need it to launch initiatives that you said you were going to do. But when you're somebody, I think it was Sam Altman that said, a startup is, when they write you a check, what they're really doing is you've got a bag of parts and they're going to push you off a cliff. And you have to, while you're falling, you've got to figure out what's in this bag. Can I make an airplane? Can I make, what are my choices here? Because, but you have to slow your descent, because at some point you're going to hit the ground. That's when you're out of money. And just because somebody gave you money once doesn't mean it's a bottomless pit. You have to be achieving your milestones, moving the ball ahead if you're going to get more funding or ultimately achieve cash flow positive. So yeah, it's exciting, but it's also very scary, because now the bar is higher and there's a lot more things that you are responsible for and you have to live up to as part of that. So I think, but treat it like it's your own money, but do what you said you were going to do.
And if I could sort of focus the question a little bit more, as you quite rightly said, the money's there to be used, but then it becomes a question of prioritizing. Where do you, and how do you go through that process? Obviously, every case is going to be a little bit different, but is there a general rule on what the priorities should be to put that money to work?
Look, money is a commodity in today's world, and I say that ideas and execution are really the core value. That said, I think the most important thing is you've got to respect the capital. If you respect the capital, and so therefore when you talk about how to utilize the capital, utilize it as if it's your own dollars. And I think that's a really, we're learning a lot in today's world about how the cheap capital that is surrounding entrepreneur and activities around growth-based businesses is in fact, you learn a lot about the characters of individuals as they start to see those dollars become easier. And some people are able to handle it very well and work through it and build great businesses with that capital and efficiently. And those are the people that I think, again, respect the capital that's coming in, regardless of the fact that somebody's willing to write them a check. They treat it as if it's their own dollars. Two is that they don't let the capital drive their business plan. They have a business plan that the capital effectively is there to support. And in the end, would build businesses that are focused on making money. You can put any value on a business today for many different reasons, but in the end of the day, the true fair value of a business is, does it actually make profitable money? And if you do that and you respect the capital along the way, you will always have people that will come to you and fund you. Even if your business isn't hugely successful or as successful as maybe you intended, you have respected other people's capital. They'll be there for you in the future.
Ben, I would imagine that managing a $5 million revenue business is probably not that much different from managing a $10 million revenue business. But by the time you hit 15, 20, 100, it becomes very different in terms of how you manage. So just wondering what advice you would give to somebody who's on that threshold of breaking through to a higher revenue business, and how you manage your resources, your time, and your priorities as the numbers go up.
There's a lot of, every business is different. Sometimes I think the number of people has more impact than the revenue itself, and there are lots of different goals for businesses. I certainly, I had my company that I took public was profitable before we took it public, and then spent, and then was trying to get back to that. So in general, I do believe you have to understand how this business is going to earn. Having said that, there are other types of businesses. WhatsApp didn't get bought for $19 billion because it was profitable. It got bought because it's an enormously valuable asset of human beings that somebody needed. Instagram, same thing. Snapchat, they'll do 150 million in revenue. They just took a tank, right? So it isn't that I'm against profit. I am. It's just at the right time. Amazon only recently, they're in their 8th quarter of profitability after being in business. I met Bezos in '93, so do the math. That's 24 years. 24 years, of which 2 are profitable. Because sometimes, and I guess the way I was going to answer your question the way you first asked it was frugal but not frightened. We don't give entrepreneurs money, we invest. And we invest not so they can spend, but so they can invest in turn. And so it is entirely acceptable, as an example, to lose money as long as it's a quest for a certain thing. So if you're acquiring customers at a loss, but they will be net profitable on a unit basis over time, that's reasonable. I'm not one of these people that's like, oh, we'll figure it out in the future. Oh, except once. I was like that once. So things do change. Another answer that might, because there's not just one, and it's also tied to the question of sort of learnings and what entrepreneurs can think about, is the reality of focus. Every entrepreneur has a journey of some period of time, from minutes to days to years, to find out what their true northern light is and what their focus needs to be. And once you've figured that out, and once you strip away all the other things, and by the way, I've seen entrepreneurs who, after spending every quarter for 3 or 4 years talking about how it would be great if they could just find that one focus, come back to me after 4 years and say, Ben, best thing ever just happened. It's like, what? I just figured how valuable it is to be focused. And I was like, wow, is this where you tell me thank you? But they don't remember that I told them that 16 times. But here's the time I remember it the most. I'm like, great, what does that mean? Oh, everything's about this one thing, so we're going to jettison everything else. And I was like, isn't everything else like $4 million a month? It's like, yeah, but it's distracting. It's like, okay. It was the right choice. I would have liked if he'd made it before he was generating $4 million of revenue in that area, because he'd pushed all that effort towards it. But ultimately, the best businesses are about focus. Think about the best businesses in the world. Forget about revenue for a second. Within the space. Usually the thing they do second isn't that material. What does Google do other than search that's worth anything? I'm not sure. What does Facebook do other than social that's worth anything? Once again, don't know. There's usually one thing that is the vast majority of a business, and if you can figure out what that is for you, what your true northern light is, not all, but many of the challenges, both of your own revenue growth and your employee growth, they don't go away, they just get easier, because you can benchmark everything against that goal. Maybe that goal is it's purely cash flow positive in the next 3 years, And then does it help with that agenda? If it doesn't, you shouldn't be doing it. Focus gives you enormous strength. It's the difference between diffuse sunlight barely giving me a tan and a laser that can cut through 3 inches of metal. That's the power of focus, and it's true for entrepreneurs as well.
One thing I just wanted to say, in terms of the profitability engine, the concept that is very critical, though, is I always say if you're going to build a business, you got to build it such that if no one ever calls you, you're happy to own it forever. And this is a problem we have in today's world, is that people are building businesses with this short-sighted mind that somebody else will take this and make it work. And in the case of WhatsApp, in the case of Snapchat, things like that, these are businesses, no question, hugely successful. And for somebody else, they've been able to monetize that in massive ways. Instagram, hugely valuable acquisition for Facebook. The challenge is, when you're Snapchat, for example, today, they lost $2 billion in the last quarter, this most recent thing. How does that business stand alone? Will that business ever be able to make and justify a $20+ billion market cap on its own? And that's the question you have to ask. And it's done very well for investors along the way, but how will that business be going forward? And this is, look, the startup ecosystem is very important, and that whole sort of path. But at some point, a business has to be a real business. And that's why if it can never make profits, or if it is not knowing how to make profits that justify its value, that doesn't make good sense.
Derek, can I bring this very point to you? Because, and Ben, you brought it up, Amazon went through years and years and years where it wasn't making any money. I think of Shopify, for instance, that is still not making any money, but whose stock has increased by about close to 70% in the last 52 weeks. Where is that line, again, for somebody who hasn't had the experience that all three of you got, but where is that line of saying it's okay that I'm not making money, that I'm not in the black yet? Because take a look at Amazon, and at what point do you say, I'm not in the black yet, and I think I should probably turn off the lights and shut the door?
Well, I think you bring up two good, interesting examples. Both Amazon and Shopify essentially choose to not be profitable, right? They, at any point, could have significantly reduced their expenditures by 25% and not hurt their core businesses. But they are choosing to invest into their business and operate at a loss because they have that commodity of capital available to them to do that. That's why they either went public or did what they did, because they're choosing to aggressively grow their businesses. But it is a choice. There are other businesses that don't have that choice, where they have not found that one thing which is ultimately generating a positive cash flow that the rest of the business can then spend. And I think that's, well, there's many different points for different entrepreneurs where you're going to choose where are you. But the earlier you are in your cycle, you're nowhere near that point, and you're dependent, and you're investing on your investor capital to try to get there. We're seeing a rise in bootstrap companies, But that's companies that haven't taken capital. They're surviving off what they kill. But those companies will, by their nature, grow slower than one that has a commodity that they can use to accelerate their business. And I talk to entrepreneurs sometimes, they say, I really need to raise money. It's like, well, you're actually generating revenue. You've got a business going. Why do you need to raise money? And they don't always know. I said, because there are reasons. Hey, it's going to become a very competitive market, and I have to make sure I get out as aggressively before somebody else gets out there. But you don't always have that. If you really have a unique position in the marketplace, maybe you can grow slower. Maybe you don't need to raise the money, and you can make the choices to make the choices that Amazon or Shopify have done, which is reinvest back into the business.
You know, I also realized that it should be well understood, hopefully, that there are very different types of businesses and very different types of funding for those businesses. So, like, as an example, you earlier said money is a commodity. Someone said that to me too when I had a public company that was trading for, a year later, 33 cents on the dollar. Some Harvard kid I hired, and I spent a semester at Harvard, so I'm not opposed to Harvard, but he walked in and said, why aren't you spending all this money? You got all this money, money's available for any company at any time when you need it. I was like, excuse me, where the fuck did you read that, pal? Because it took me 25 years to raise my first $1 million. This company is public, and I can't get an appointment with anybody that wants to buy my shares. So why don't you show me this infinite trough of cash or get the F out of my office? Now, that was right before the bubble burst, and those companies, by and large, all disappeared. Money is often available for the very best companies and entrepreneurs in the right situations. But that's an incredibly elite tier. I'm not being arrogant. It's just, there's 1,900 companies funded a year, of which, less than 10% go on to raise venture. There's probably, I said yesterday, I see 1,000 pitches a year. That's probably on the low end. Someone's asking me, really? Yeah, well, I'll go to Y Combinator and I'll see in 1 year 240 company pitches just there in 4 days, right? So are these companies all raising money? Absolutely not. So there's different sources of capital, and one of the answers is the only way you can afford to not be a profitable business. Every business I ever built was profitable. I never raised venture, nor could I, nor should I have, because venture wants the kind of velocity that can only be achieved by pouring an enormous amount of fuel onto the fire. When you pour that fuel on and you make it, it's truly exciting. However, that doesn't mean you're going to make it. Death is an option too. It's sort of like venture capital is about a bunch of Mars shots. But if you miss Mars, there's no air. There's nothing, you just die. So, when I go to the point of entrepreneurship is hard, that's one of the reasons. Another thing that's unfortunate is sometimes businesses grow like that change. They can raise money freely. Think of businesses in the past like Second Life or the woman that had the clothing business went up and down. They raise all this money, but all of a sudden one day they get too far ahead of themselves and the business changes and the velocity changes. And now people are no longer excited, and now they have no choice but to figure out how to get profitable, and maybe they didn't build a smart business that could get there. So, I'm not enamored of lose money all day long. It's never about a real business, but there are different types of assets in these businesses. If you're building a mobile app, your audience, if you can meet 100 million users, there's a lot of ways to monetize that over time. So to summarize it, there's different sources of capital. In the normal world of the 99% of the businesses that either bootstrap or raise money from friends and family or get money from sort of professional angels or other non-institutional sources of capital, profit is your way of surviving. And I'll give one last analogy. It's sort of the difference between being a hunter and a real estate developer. If you fund a business that's going to get to profitability, it's like you said, you eat what you kill. That's exactly true. You go out in the woods, you bring back a moose, you eat, you're good to go. But you want to build a skyscraper in Toronto? You doing that off of your sticks and profit? No, you're leveraging the crap out of yourself, and if you're right, you make an enormous amount of money, and if you're wrong, it's called bankruptcy.
Can I just conclude with one thought? And Derek and I talked about it briefly a little earlier, but I'd like to get your thoughts on it as well. We were talking about the difficulties, the challenges of, again, when you're not just in the early stages, but when you've become successful to a degree. And you get the siren song from the valley sort of saying, here's some money as long as you move down here. Outfits in New York and Boston beginning to say the same sort of thing. Everybody's trying to attract into their technology corridor and using money investment as a way to populate that. So when it comes to somebody thinking, well, I want to, I'd kind of like to keep my business in Canada, or I'd like to invest, or not only keep it in Canada, but keep it in an unlikely spot. How tough is it? I mean, I know, Derek, you and I talked about it, but from your perspectives, because you operate like Derek does across borders, how tough is it to decide that you're going to be Canadian in this business?
So, I have a couple of examples of businesses that have come and made the decision to stay. Those have gone down to things like Y Combinator, and then kind of had the force to go and stay down and relocate and then come back. And I've had companies that have gone down and stayed in the valley. So here's my perspective. I think great ideas, great businesses, great leaders, money will come to them if they have great opportunity, and you should build where you feel you can build with great ecosystems around you. And so we'll talk about that in a minute. You got a great talent is really important. You got to be able to get the people that'll help you get from zero to something. But where Silicon Valley becomes really powerful, in my opinion, is not the startup phase. Actually, I think it's very difficult to start a business in Silicon Valley. One, it's very expensive, and two, it's very noisy. And the culture of people is very difficult to kind of keep people. If you've run into any snags in the early years, it's very hard to keep them there. Like they leave very quickly. But Silicon Valley is where there are phenomenal talents on how to go from something to global or real scale up. And this is the thing that you learn. Like, for example, in a city like Toronto, we have an unbelievable kind of ecosystem growing now where amazing companies are growing. But what we don't have is those people that have really taken a company from 500 people to 5,000 people, or from sort of a $50 million value to a $5 billion value, or $50 billion value. That is something that is lacking, and I think that's where you need wisdom, you need time, you need a lot of companies and seedlings coming from there. And so wherever region you decide to starting from zero, it's actually nice to be in a place where you don't have a lot of noise, and as long as the capital will come to you. But it's really important at some point to get into a region that has that next level to drive you to the next level for the business.
Ben, have you got some thoughts on this?
Yeah, I've funded probably 6 Canadian companies over the last decade. Many of them I think all of them I found in Silicon Valley because they were visiting. Some of them stayed based here. I think the point on the ecosystem is an entirely fair one. In fairness, I didn't drink the Silicon Valley Kool-Aid for a long time. I moved there from the East Coast, Boston, New York, and I think these people are crazy for a while until I realized, they're crazy like a fox. When it works tremendously well. What I've come to understand is that I've traveled around the world a reasonable amount looking at other places that are trying to build the equivalent of Silicon Valley. And I think that's going to be hard in that, it's Shangri-La, it's Florence during the Renaissance, all through history, it's Rome during its heyday. There have been places on this planet that have drawn a specific type of human, the best and brightest of that. And Silicon Valley has done that. I've seen it from literally everywhere. I mean, I've funded everybody from Argentinians to people from Poland, where they brought their companies there. It is crowded, it is difficult, it is noisy. The analogy I would use, though, is, if you want to perform Chicago second-class stage, your play, that is more than fine if that's your goal in life. But if you want to be at the pinnacle of your existence, you're either going to go to Broadway, or I guess you're going to do Shakespeare somewhere in England. There is no other place where you will be able to aspire to the same levels. And part of it is because you will be able to aspire to and learn from those that have achieved those levels. I came from New York. In New York, most of the people over the last long time that you would look to as potentially icons of industry, or however you want to think about it, people that achieve great wealth on their own, not on some inheritance, were people in financial businesses, a lot of hedge fund guys and bankers. And so you didn't have that person you could imagine looking like in entrepreneurship. One of the great things about Silicon Valley is if you see somebody of great success in Silicon Valley, it's highly likely they either are or are attached to entrepreneurship. You see young people that have done tremendous things, and other young people don't just get advice from them, but they see that that's possible, right? I'll go back to my building analogy. I don't know what the tallest building you can build here is, but I would assume if I'm a building guy, I'd probably want to be in New York because those are the tallest buildings in the world, except maybe Singapore and some Saudi Arabian countries. So you have an ecosystem. You also have a peer group of the best and brightest coming together. it's not that bright people don't stay everywhere. I mean, right now there's been a couple of articles about the reverse brain drain of how some of the U.S. Great technologists are coming into Canada, basically because they want to get as far away from Trump as they possibly can, which I applaud that effort to get away from Trump, but I'm going to have to stick it out. So I think the ecosystem's phenomenal. I don't think you should move till you're ready if you are going to move. And I'll make one last point. Sometimes it's about downside protection, which is not something I spend a lot of time on, but if you build a phenomenal engineering team in most places and things don't work out, in the experience I've had so far, those people get jobs. In Silicon Valley, sometimes those businesses get bought. And they get bought for anywhere from interesting to extremely interesting. The concept of the talent acquisition doesn't really happen very much anymore. But the sort of end game can be better even in a negative outcome in Silicon Valley because there's so many more people that, as you said, it's crowded, those resources are hard to get, it's expensive. Well, if you've got a bunch of those people and they're great, sometimes just giving them a home is worth a lot to a company, which is, and last point, sometimes that gives you a landing point. There's a lot of great entrepreneurs that tried before and didn't quite make it. And I'm not one of these people that stands up and say, failure is great, you learn so much. I hate failure. Failure sucks. There's no way other to look at it than that it is not a good thing. But you do learn, and you do get more experience being an entrepreneur in a year than you'll get in any job in a decade. So if you, through your own entrepreneurial endeavors, end up landing at a company of substance, you're going to land at a much higher rate than if you walked in off the street the year before you had that experience. And that might give you opportunities to do things that you would have had to wait a really long time to do. And for your own personal advancement, that can be quite valuable. So there's a lot of little and big things that make it useful to be there, but we don't have the tax credits you guys do, and it costs more for engineers, and it's a different game.
We don't have Donald Trump either, so.
And what I would,
sorry about that.
Just as one closing, I spoke earlier about, in general, Silicon Valley, but one thing that will happen is, because of the density of people that are there, is the opportunity for a positive collision is much higher than you're going to get in another area. And so if you aren't going to reside there, don't think you have to, but you have to be very prepared to be physically present and participate a lot. My entire business that I'm building right now happened because of one of those positive collisions. I sold my last company, and I had a chance to have a glass of wine with a friend and I was talking about my ideas for changing things in the entertainment industry, and he goes, oh, well, my brother's Bill Silva. And I go, who's that? He goes, well, he manages the Hollywood Bowl, he used to promote Metallica, and it's like, oh, interesting. So you have these fortuitous connections that just seem to happen because there's so many people in such a dense area that you can walk out and have a cup of coffee with somebody and somebody that can be very relevant, and they're probably 1 degree or 2 degrees removed from somebody that can really impact your business in a very positive way. So you don't have to live there necessarily, but if you do, you increase the odds of having these positive collisions.
It's a great point. I mean, you think about business development opportunities and partnerships. Some of you might know that Tony, who ran Zappos, has started a mini city. He's basically taken over downtown Las Vegas. The reason he did that all came from a book he read about the efficacy of cities. Apparently, according to this book, huge book, people are about 25 to 35% more productive when they live in cities than in suburban areas. And they're trying to explain why. And in the end, they believe it comes down to serendipity. Sometimes 1 and 1 equals 17. And those 1 and 1 bump intos can happen in places of concentration of talent in a way that isn't possible in places where there are less of those connections. If you have 10,000 people of level X talent in one place and you've got 200,000 in another and it's geographically the same size, the chance that you're going to bump into them over a beer is a little bit higher. And that can do great things. And you do end up going there because, I was a New York-based company. I'd fly to California all the time to do business development. And just, you go, what's that old saying about robbing banks? You go where the money is? Well, if you're doing biz dev deals on the web and mobile, you're probably coming to the Bay because that's where all the users are.
Believe it or not, we're out of time, but I have terrifically enjoyed this conversation with Ben, Som, and Derek. Thank you guys very much. That was terrific.
Thank you.
Thank you, Tom.
Thanks for hosting me.
Hi, I'm Amber Mack, and if you like this video, click to subscribe to the Breakout Project channel to watch more videos just like this one.